The young first-time home buyer is disappearing, and we're seeing more people mortgage homes with higher rates. I'll explain what this means next. So if you get some value out of this or you like what you hear, make sure to subscribe to the channel. And if you want to schedule a call with our team about how to navigate these new trends that we're seeing in the marketplace, you can do that with the link in the comments. The average first-time home buyer, the age of that person has changed dramatically since 1991, and we've seen that more folks and more homes have mortgage rates above 6% than we did even a couple years ago. And these are some trends you're going to want to pay attention to. I'll explain all the details around them next, and then what it means for people thinking about buying or selling in the next 12, 18, 24 months, what they should be thinking about seeing these trends start to emerge. So the young first-time home buyer, that person is not as common in the market now as it was back in the 90s and even early 2000s. I'm going to have Nick put up a chart here that shows this data. The average age of a first-time home buyer was 28 years old in 1991, and it jumped up to 38 years old in 2004. That's 10 years. Think about what your life was like 10 years ago. It was probably very different. And the repeat home buyer went from an average age of 42 to 61 years old during that same time span. So we're seeing that buyers are getting older, and that's a trend that's changing in the market. Now, there's also some things that are happening from a household formation status. People are forming households, getting married, having kids later, which is definitely a factor here. And this is something that's affecting the market. There's also the question of affordability, and can these younger people actually afford real estate? The other trend we're seeing is that 17.2% of all homeowners have a rate of 6% or higher on their current home. That number was just 7.3% in 2022, and it's the lowest that we've seen since the fourth quarter of 2016. So we're seeing that people are getting okay with higher mortgage rates, and there's probably a couple reasons behind that. So a major life event's usually what triggers a move. Folks also know that rates aren't going to be falling anytime soon, at least the people that are transacting right now, because that's very clear based on the projections for 2025 when it comes to mortgage rates, and the fact that we need something really bad to happen for rates to come down to those 3 and 4% levels. And we're also seeing more folks coming in and buying cash, and there's more mortgage-free homeowners than there have been in the past. So what do these two trends mean? Well, if I'm a seller right now, what I'm looking at is that people are now looking at what that first-time home purchase used to be, and that may be something that happens later in life. You don't see a lot of 20-year-olds buying properties anymore. That number has moved into the 30s. So as a seller, that tells me there's a lot of pent-up demand in the marketplace, because if these people are getting shut out, it's not a lack of want for home ownership. It's typically around affordability. So if I'm a seller and I'm seeing that, especially in a market like the greater Philadelphia area, where the average inventory that we've seen the past few months is about a 2 to 2.11 months supply, meaning it would take a little over 60 days for all the homes to get sold, that tells me there's opportunity in the market as a seller. Now, what I'm also seeing is that rise in the percentage of homeowners that have a 6+ mortgage rate on their home. And again, we'll have all these charts up. You can see the data that we're talking about here. And that tells me people are now okay buying with elevated rates. So the rates haven't stopped home purchasers. We're just seeing home purchasers being squeezed out by inventory and affordability. So as a seller, I see that as an opportunity to cash out high on my property if I'm thinking about making a move in the next year or two. So what I'm seeing as a buyer is that there's still going to be competition out there, that some folks are going to be okay with these higher rates because they're not going to be coming down. And do I want to be competing with all the folks on the sidelines, or do I want to be competing with the people that are savvy enough to realize that prices are only going to continue to increase and that rates are going to be where they are? And these are all the projections from all the economists out there. We've talked about it at length on this show. So seeing that the market's starting to become okay with the current rate environment and realizing that the demand's still going to be there and it's sitting on the sidelines right now, if my life calls for a real estate decision, it might make sense to pull the trigger now rather than wait for more favorable buying conditions. This is the stuff you want to be looking at as a home buyer. Can I afford the payment? Does the payment make sense? And is the house going to work for me? Sure, if rates come down, I could refinance in the future. That's not a guarantee. What happens if they don't come down and prices continue to go up? And that's the question that buyers need to be asking themselves right now. These two data points here, the age of first-time home buyers and repeat home buyers increasing dramatically since 1991, and the share of homeowners with a higher than 6% rate, the market's going to be slowly opening up here. Do I want to be in that market when it's totally open, or do I want to get ahead of the market? That's the question buyers and sellers need to ask themselves, and a lot of it's going to come down to what's going on in your life. All the more reason you want to talk to an agent who can help you make those decisions. So if you have questions about this, you're seeing these trends, you don't know what it means, click on the link in the comments, and we're happy to answer them for you.